Oh, hello, Trey. I thought I'd actually speak. I just realized I've got my headset on. So this is one session 125. I just thought I'd fire off a live trade. I just saw something setting up as I was about to record this. And so I just thought I'd set this up. So you may notice I'm targeting a lower major EMA. These are what we call price magnets. We tend to bounce between major EMAs. Now, I am short 8 on the NQ, so we should hopefully we get filled. I perhaps come on, get back down there. Nothing worse than we miss our target, but just note here pretty much in advance. So I was looking for price to come down. There we go. So now we're filled. Okay, so we just had a ton of volume go through just there. So what we will do now is go back to the traditional. So that was 1326. So it was 1326.58 after commissions. Now just here we could get, I call this a potential 2B. We might have, or actually it'd be a 3B. But I want you to notice here I've got a term we call follow the gold. So see how the gold is sort of rolling over. So if you want to be trading with the trend until you get sort of major highs, and this was off the high of the day. So I'm actually trading during the traders the Globex session. So this is actually Sunday afternoon in the US, or Sunday evening, Monday morning down under in Australia. So normally this time of day I'd be trading either the RTY oil, particularly right now 6:33. Look, in about 30 minutes the oil market picks up, and the NQ got plenty of sort of a volume's not too bad, but it's on the RTY, the Russell, it's a bit, look, it's hard to sort of be trading 20 contracts at a time. You get a lot of slippage. But look, let's get to the PowerPoint and we'll go through this here. So just, by the way, just watch here. Quite often if we had have taken this one, we'll get a bounce up here at this level, but we'll come back to that and check that out. So traders, as I mentioned, this is session 125, a big welcome. So in today's session I'm going to be playing back a live trading session that I had on the Russell. I usually don't have sound on them. I usually just push play and just away we go. So there'll be a number of trades there, plus the very next day in the afternoon session I fired off a number of trades as well. I'll show you those, but I wasn't recording, but I'll give you a very quick overview of those as well. So I love the Russell during the New York session. That in the afternoon it suits me. I'm down under in Australia at the moment, so the afternoon session is early morning. I don't like to trade the New York Open. It's too late in the evening for me. Now so we'll look at the RTY. As I mentioned, I love the Nasdaq, but it can be, I've got two nicknames here, the nasty Nas and the nifty Nas. We just never know what it's going to be like. So do need to pull up the disclaimer. Traders, there is a risk in trading. Don't trade with money that you can't afford to lose. Stay on the simulator until you're consistently profitable. And of course, traders, you can always pause the recording if you want to read the disclaimer in full. If you haven't already, please feel free to on the link below download my training manual. Better still, make sure you subscribe to my channel, and better still than that, and just a very quick advertisement, why don't you become a member? For $197 you get all of my indicators. There's literally there's over 200 training videos now. You don't have to watch them all, okay? So I get you on the right track with just one or two strategies to begin with. And I just remembered I haven't reviewed, I put this together, it's as I mentioned, it's Monday morning now. I put this together Friday, so and I didn't get around to finish the recording. So a couple of these slides, I think I remember most of them. Okay, as a bonus, I've got to say this, my videos are raw, real and unedited. Okay, so they're not edited. So as a bonus also, you can get to attend 8 of my 2-hour live coaching sessions. If you can't attend the live sessions, they are recorded. They're virtually priceless, traders. But as you're about to see, the setups that I teach you, like that one just there I just mentioned. Okay, so I just mentioned to you, where did I say we'll probably bounce? Up there. Okay, now, and the reason I knew that is these are all patterns. The geometric patterns that we see appear in the market every day. I don't know if you saw me do this, but I was looking down what's below me, because down below I've got a couple of other price magnets. You see, as professional traders, we will trade between these levels and to these levels. Now, there's no such thing as certainties when it comes to trading. What we've got is probabilities, and the probabilities are on our side that we're going to bounce off these levels. Now, think about it: lower low, lower high. Now, that's probably about a 62% retracement. And look, I'll apply, there it is there, 61.8, almost to the tick. How do I know? Because we go back and we hit these levels every day. Now, I apply fib levels more for interest out of all things, but if you've got a Fibonacci bounce level and one of our setups, this is actually called a 3B, it dramatically improves the probability of your trade. So come and join me, link below, 197. Let's now get into this. Now, traders, this is truly a business, and I know many of you see this, but I want to drill this down into you, because if you gain clarity on what you want to achieve with your trading, it makes life so much easier. One of the greatest challenges is that traders set their expectations so high that they're not realistic. What is a realistic target? Between $100 and $200 a day per contract. Now, on the NQ, my target 6 tick is $300 a day, where on the RTY it's $200 a day per contract. This is, now I want to get in, get out, get it wrapped up within an hour or two, maximum of 2 hours. Okay, so we all have different trading requirements, but if you target this with the setups I'm about to show you, this is so realistic, and this will make you wealthy. Now, I want you to think about the setups. Don't let any prior prejudice sort of say, oh, this won't work for me. The only thing you need to do is maybe adjust the time frame, because where I just showed you the 6 tick NQ, you can't trade the 6 tick during the New York hours, and the reason being, it's far too fast during the New York hours, but you can trade a 16 tick. So I give you the suggested time frames, which is the right time frame to trade for whichever market, whichever one is slow enough where it's tradable. And that's the thing. The logic behind these are geometric patterns that appear in the market each and every day, as we're about to see. So what we want to be doing is trading in the direction of the higher time frame. You'll quite often see me put in a buy stop order or a sell stop order in advance. How do I know where to put my order in? Because I'm looking at the higher time frame, and that's basically telling me where to get or where to put my order in. Now, also what I'm showing you here is on Renko, but you can apply this my setups to any type of chart and any trading platform. If I don't have the indicators for you for your particular platform, I give you you can set up everything I show you here on standard indicators. I just give you the custom settings to actually use. Now, what am I looking for when I trade? Like the advantage we've got now, or right now on this market, the NQ, I'm looking for tradable volatility. So I'm looking for a market that's trending well, where we've got good trading volume. Let's just see what's happened here with this NQ again. Okay, so you just had another trade entry right here. Now see this speed at the moment. This is where you've got to be really cautious, traders. Like, this is really too fast. So when we see the market taking off like this, we can either so over here, my target with this here will be about 2,500 for the day, by the way. So that was a plain vanilla entry just there. We just had a plain vanilla just there. And this for members watching, this is our traditional T3. We've got a pattern called the T3, very high probability. However, just back onto the time frame for a moment. If the market's moving this quickly, we've got to slow things down. So we either sit on our hands or we increase the time frame that we're trading, but it's got to be, you know, slow enough. Now you only need 4 or 5 great quality trades a day. So if the market's too slow, it's time just to sit on hands. Now back onto this. Okay, so let's quickly play this back on the 4 tick. Now you may wonder, why do I have different targets for different markets? Well, the target I put on the market each day depends on the capital per contract I need to employ. So I won't go into that in this video, but what I want to show you here is this is all over and done within, and I've got this recorded which I'll show you. We'll just skip through on the trades because I want to show you the different setups. So 6 trades, 5 wins in 35 minutes, and well and truly over my $200 per contract. Now to trade this market realistically you need $4,000. so please stay with me for a moment, because I'm going to show you how virtually anyone can be trading these markets even if they don't have a lot of capital. So if you say wish to trade the Russell, as I'm about to show you how to do that, and you don't have a minimum of 4,000 to trade this time frame, you can get away with 2,500 or 250. But if you're going to trade during New York, $400 you need. Okay, if you're going to start with that, what it means is if you go for just $20 a day, within 12 weeks you've now got your 4,000. You can now roll over and start trading the big contract. Once we get across there, we go for 200 a day, and you can see potentially where you are in 12 weeks. You've got an income of $10,000 a week. Your capital's now $46,000. Now if you're a young gun or perhaps middle-aged like myself, I just turned 50, sorry, I wish it was 55, just turned 65, going for here $300 a day. Look where you are in 8 weeks. Okay, so and this is very realistic here, trading 10 contracts during the New York hours. Now here realistically we only need 4 or 5 good quality trades a day. So let me pull up the recording and let's have a look at that. But before we do, I just want to quickly mention to you, now fortunately on virtually every trading platform these plot automatically, but this is where as professionals we want to know where our pivots are, where the open high, the prior days open high, low and close is, our major being the 89 and 200 EMAs, our intraday swing highs and lows, and our current day's high and low. So let me pull up the recording. Where is it here? I think it's this one. Yep, let's go back to the start, and I'm just going to walk you through some of the trades here that I took and why I took them. Now I'm hoping this is the right recording. Okay, put this together and I got a bit sidetracked putting that trade on, but just here you can see here we've pulled back. Now see where I've just placed this order, so I know exactly where to place it based upon what's happening on a higher time frame. So just there I'm waiting to get filled. Now when we take these trades, one of the things I'm always looking at is where's my last prior swing low, because what we may wish to do is go for a larger target when we target these lows. Okay, so that's what I'm looking at. Now also just there, when I enter this trade, normally I like to have my stop loss 1 tick above, but what I'll sometimes do is just have a fixed stop, and I'm just hoping the market doesn't come back and take me out. But one thing we don't want to do is to fiddle with our stops, and what I mean by that, traders, is move them hoping the market's going to stop. So generally, as I mentioned, I'll be 1 tick above. Okay, and I'm probably looking at that in the video right now. Now notice here we've got a bit of a bounce. Now this is quite common here. So here I'm using a fixed stop, by the way, of 16 ticks. So note here we've come back to the 89 EMA and I've got a wee bit of a bounce right now. This is quite common, and this is where then we call it a T20 sets up and we then roll over. Now the codes I use, traders, doesn't take long to learn them. They're just describing certain patterns. Okay, and here I've got a 20 tick target. Now I don't always get 20 ticks. For an example, if I cut a trade because I might be at a pivot or an area of support or resistance, I might cut a trade. Let me just pull, let's just move this along, because I do want to show you some other trades from the day after, I think it was, or whenever it was, Friday's trades, when I was meant to be recording this video. All right, so what I've done here, I've now gone and shorted again. Now you can only add to a position, or you can add to a position anytime, but we never ever risk any more than 2%. So I'm generally at around the 1% per trade, so I can add to a position, so my total exposure is 2%. And this is where traders get greedy. They're not willing to take the time. If you don't have that capital, or you see like this is a really nice double top pivot bounce with divergence, I call these bet the farms, and they're really good setups. So what I'm really saying here is that you shouldn't have, or couldn't have, or no, you shouldn't have entered another trade here if you're already at a 2% risk. Otherwise the trading gods will come down and drain your trading account. So just there, I'm saying here the YM's heading down, the ES is heading down, which is generally a good signal. As I mentioned, this is in the afternoon session, so we've got plenty of volume, so good time of day. Here I've pulled my stop down to break even. Of course, on your ATM, on your dome, you can have that automatically set in that you go to break even when you hit targets. Sometimes I do that, other times I'll drag it down. I'll just go by the momentum. It's just here. So in a moment I'll get filled on this. Now what I could have done is gone for a larger target, except I'm what we call a scalper, and as a scalper traders, I like to get in, and I'll pause this because I'm about to get a loss if I remember correctly. As a scalper, I like to get in, get out, get paid. Okay, I don't have the temperament really where I want to wait and just sit on a trade. I like to get in and look for another opportunity. Now this here is a what I call a T20-1, just a really nice short down to the low I would have been targeting. But I remember this because I get stopped almost immediately. That's trading. However, the trade itself, if I remember correctly, I get stopped here. I think I get stopped. The trade itself met all of my trading conditions and all of my rules. Okay, so everything was met. So maybe it is a winner. What am I doing pulling my stop down? I'm doing that for a reason. I can't remember now. So here, if it reverses, I then look for my next trade. Okay, right. So I think I made a blunder on that. No AC1 candle. What I'm looking at is the anchor chart candles on the higher time frames to also be trending in my trade direction. I think that's what it meant. Okay, so here, is this going to be a winner or a loser? I can't remember. When you're actively day trading, a couple of days is a long time. That's why it's important you have a trading journal. Now there I just got stopped out of that, so I was correct. So come out, it met all of my trading conditions. I'm not sure what I meant by AC1 candle there, can't remember, but here I got stopped. Okay, I've been so I'm still up, okay, but I obviously would thinking, damn it. Okay, now I've got a T3. Okay, now a T3 is a reversion to the mean setup. It's a pattern you see every single day in virtually every market that has some volume and some volatility. It's really a 100% rules-based strategy. It's got to meet some certain rules and criteria as a pattern. If it doesn't, you don't take the trade. Very, very simple pattern. It is a reversal strategy though, right? And it can turn into a trend following setup. So what I mean by that is, for newer traders, you don't take these reversal strategies initially. You want to be trading with the trend. And let me just skip that along because time's getting long here. Okay, so down here generally, where I got out here with the T3, see you come down to the major EMAs. This is where quite often, now we may punch through, but this is where quite often you'll bounce. So I'm quite happy to exit at that point. Now just skip it along here. So my target here on this market is 200 a day per contract. So once again, what I call POQ, Power Queen, I like to hit that, then I'll finish for the day. And usually that's within 30 minutes to an hour maximum. Now, I'm checking out when I scroll what's in front of me or above the trade, just there. So I'm checking that out normally. Okay, and here just a plain vanilla, once again, very similar to this setup, call them T20-1s. And down here, see that swing here, and then you've got this swing over here. Usually we're looking at those as potential targets. Let's just fast forward this a bit. So just checking a couple of things there with the bar status indicator as we come down. Okay, once again, I can't remember everything that happened. Okay, now just there, what I exited that trade because I thought it was going to reverse, and then I thought, no, I'll jump back in again. So you can do that. So once again, sometimes we're going to get out of a trade and then it reverses and heads back again. I try not to do that too much because commissions do get expensive. However, it's called probing the market too. So we want to probe if we think it's going to reverse, and that's exactly what I was thinking just there. So here I am short. I'm thinking down here now. And if we continue to go here, so I'm just looking at this, and way down there I've got a lot of potential support. Okay, so just see if we can keep going here, and I actually need to turn that camera off because I can't see. Just turn that off for a moment, and because I want to see this here. So down we come. Here we've bounced up a little, and how far do we go? So now I'm out of that trade. So here was actually, how many trades or so with that? That might have been 6 trades or 5 trades and 1 loss in 35 minutes. That's up $1,800 for that time. Now let me just show you very quickly trade. And so I'm looking, and notice here we came down not long after, so there was another setup there, and lo and behold we hit the pivot. Now let me show you this as well. So this was one moment. Okay, so this is the 4 tick also on the Friday, and these are just plain vanilla trade entries. So this is at 2:25 in the afternoon. Now I was late getting underway this particular day, and so and I don't trade beyond 3 p.m. So let me just turn that camera back on for a moment. So I don't trade beyond 3 p.m. I just tend to find there's too much volatility in the market, but then the market closes at 4 Central and then reopens at 5 Central. So just plain vanilla entries. Then I had what I call a 2D up there, followed by another T20-1. Thank you very much. And I then jumped on to this T12. Now all of these, when you understand the patterns, they're all patterns. Okay, so there are pretty much set conditions of what we're looking for these. And this one, unfortunately, I missed. That would have been a very, very nice trend trade. Now this one here, I jumped on another T12, and I hit the resistance up here. I had the 89 and the 200, so I went long. Started to look like it could have reversed, which it could have reversed, so I decided to exit that trade, and next second, bang, it would have been a nice trade. Then hadn't quite hit my target. I then jumped in on this 2B T20 just here, jumped in on this, it's called a 3B. I could have got, by the way, I could have entered there, I could have entered here, and down here I actually stuffed this up, excuse my expression. I double clicked, and for members watching, yes, it was a T3. So I was looking, and I perhaps shouldn't have taken it there. I should have waited for the low right there. However, I was getting itchy because we were end of the day. Not that we should be doing that, jumping in, but I double clicked, entered twice, and so one said I got out picking only up a couple of ticks, others I got out break even. So that was over within 30 minutes. And that's where really, if you're a new trader, you don't want to be rushing your trades. Okay, so I should have been, if you're in the US, trading a bit earlier there. So it was 9 trades, 7 wins, 1 break even. Now let's just quickly go back to that NQ. I just want to show you that as I finish this video. So here we go. So I just want to show you how straightforward trading can be. Let me save you years. I've been day trading now for 28 years. You name it, I've purchased it, courses, indicators. For your investment to have me show you what to do, I'm going to save you years and a small fortune along the way, but you've got to follow the rules. And that's where most traders are not willing to do that. For an example, I have traders that getting paid, they're not willing to learn the patterns. They're straightforward. I've got an EMA here, and there's certain things that are happening here that happen like clockwork every day. Remember, you're trading against traders like me who've been around for a long time. This isn't rocket science, but you've got to be willing to put some time and effort in. You know, it's just getting some screen time. I can give you everything but the screen time, but my job as your coach is to teach you step by step. Now remember, down here we had that pullback. Okay, so for members watching this, as you know, that's a T20-1 again, a reverse. Okay, we rallied up. I want you to notice here we're getting some divergence just there. See how my MACD Platinum's dropping away just there. Now we've got a 2B I should say, just there. And now you've got there's your a 2B again. Okay, and there's another one. Okay, now as we're pulling back, we've got a potential bounce just there. We just want to be careful there, traders, because see this here, it's called angulation. Okay, and it's a bit like you had where is it, back here. You got the same sort of pattern happening right now, and now you've got a wee little bit the farm. Now just very quickly, what we generally be looking for is we'd be looking for our last swing low, which is down here. So if we do break lower here, that would generally be our target. But whenever you get divergence here in the direction of a trend, that's a major bonus actually. But let's talk about really straightforward trading. It's these: follow the gold. When you start to change color like this, it generally means we may be heading towards a reversal. So therefore, if I'm looking for shorts, I want to see the gold color here. I want to follow the gold. Now if we can break below here, it means we're rolling over, and as I mentioned, very good chance we'll come down and hit this swing low. I'm just going to pause this for a moment and just see whether that happens. By the way, there's no certainties in trading, there's only probabilities. One of the things I teach traders, by the way, is do you have a fanning of the EMA? See how your EMAs are sideways at the moment? That's sort of your danger zone. Now, it doesn't look like maybe, yep, there we go. By the way, it's now 8 p.m. Okay, so it's now 8 p.m. Central Eastern Standard Time. We've now got the Tokyo open right now. So this time of day, you want to make sure you're flat. So remember, time of days of major markets around the world when they open. It's very, very important that you know when they open. So traders, come and join me and let me teach you how to day trade. Day trade any market of your choice. I've got certain favorite markets, of course, and included in the 197 you can attend 8 of my sessions. After that, if you wish to continue, it's only $97 a month. If you join it this way, I think the website, it's, what is it now, $297 a month, by the way. But anyway, traders, thank you very much. This is session 125. So hopefully go back at the start of the video, you can see me trading that NQ trade live. And what's just happened now, we're still going to the long side. So don't trade at market opens. Thanks traders, see you on the next video.